Good evening, everyone. Jeremy from Trading Safely, along with Shaun. We've got our regular weekly webinar update. We're going to go through the global markets in the next sort of 30 to 35 minutes. We're going to go through major currencies, major indices, a quick review of the commodity markets and bond markets, and see if we can come to some sensible conclusions about what's likely to turn this week. Good morning, Shaun. How are you doing over there in the UK?
Pretty good. Early start today. So, had our village feast day yesterday. So, it was all a bit boozy, to be honest with you. But there we go. I've recovered sufficiently now.
So, what's your key takeaways for the week that was?
Well, it was actually a lot. Actually, there was a lot of takeaways. The first thing. We've got a lot of new members and subscribers this week, so there's a couple of important things for reference for them. First thing is to do with stocks. On Friday, we had a bit of a flash crash on Amazon and tech, so that was semiconductors. So anything that was a crowded trade, and for the ones that have been with us for a while, we look to let the market tell us what the crowded trades are, and then they go through a topping process that we know how to monitor, and eventually what becomes fashionable, what is fashionable becomes unfashionable. So banks was the major trade of the first quarter, and semiconductors and telecoms and tech will probably be the next one. It's the reason why we don't put our stops in. We don't say that you put stops in on stocks intraday or during the day. They're based on the closing value. You could have had a stop in on Amazon, been sitting pretty for weeks on end with a lovely long position, and it all gets taken out in about 5 minutes. We had a flash crash on ETFs about 2 years ago, which was unbelievably big. And the thing about this flash crash was it was only in tech. So we put out some positive on banks on Thursday, and banks were up on Friday. So it wasn't on everything. So just shows that why we don't get involved in crowded trades unless we're very, very early in the process. Once we know a crowded trade is there, we're not going to get involved in being with it, and that's exactly why that's what happened on Friday. The other thing was on the pounds. We had an election, didn't go the way of the Conservative Party, pretty dreadful campaign. There's a lot of uncertainty and some political turmoil ahead. The pound has broken down, and we're going to be talking about that. Definitely something we want to be getting involved in. The other major one through the week is a position in corn, and put out a piece earlier in the week about how you can get involved in corn either via an ETF, which tracks the price of corn very closely, or to cover risk, you can do options on the ETF, which only cost $100 per 100 shares for a position that's only slightly out of the money. So I've been trading grains since 1979, so unfortunately I know everything about the fundamentals, which can get in the way a little bit. Start watching weather forecasts and all sorts of things about where we are. The bottom line is technically it's broken up. We had the narrowest range for over 30 years coming into the week before, which is really what got me interested technically and why we've got long it. So corn is interesting, the pound is interesting, and we saw some negatives on equities, didn't we, Jeremy? So we might as well kick on. And I think the other one was gold. Gold, we put out a sell recommendation earlier on in the week. So gold is also looks like it's topped out.
Yeah, very good. And I think for the benefit of some of the new members, we'll quickly cover off on some software that we use called MarketSmith, which enables us to look at the top and bottom sectors that are in rotation. At some stage, I'll hand over to Shaun so he can run you through that. So if anyone is new and is listening in, we have just uploaded a help video on how we set up our screens. I'll put that in today. So on the Slack channel, if you come into the help videos section, I've put up a video on how we set up our indicators and how you can interpret the screens that we're looking at. needless to say, all the colours, I've got it set up now so that they're colour-coded. Yellow's weekly, monthly's pink, brown's quarterly, and you'll get used to the colours over time. So just bear that in mind and try and watch that video if you can. But we'll quickly rip through the markets to give you a view for the week. We're starting here with the euro. The euro's been in a corrective phase, essentially since that quarterly support drop there back in the start of Q2 in April. As yet, we still haven't seen any signs of resistance move to the top. So what we're looking for there is this line here to head up above price and act as a resistance. And until that happens, we're sort of fairly reticent to be getting short the euro. We've got a weekly sell signal in place, but obviously the strength of that signal would be magnified if this line had moved above price. So, I mean, the levels are pretty there. We're starting to see there is a lot of resistance above this sort of 113 zone, all the way up through to 116. There's a number of levels. You'd have to think that if we get a monthly close over, circa this 113, 114 level, then the market could be in for more of a move. But right now, although we had a bearish close on the week, and there is some space down here that the euro could fall, we're holding off on pulling the trigger on this one until we get a bit more evidence of some proper selling coming in. So that's my takeaway on the euro. So in the short term, when we look at next week, if I add in the forecast bullish and bearish zones, just bear with me. Here they are there. We'd really like to see the market close the week under 1.1145, and for the bulls, we'd like to see it back over circa 112,644 on a weekly closing basis. In the short term, we've moved above last week and last month's close as well, so we do need to get back above there pretty quickly to support the euro. Bigger picture, guys, nothing has changed. The euro is still clearly in a downtrend. We're coming into the end of the quarter again. We are going to be a long way above the quarterly upper bullish pivot, so that is fair warning. There it is there. That's the bullish quarterly pivot. The bearish one's all the way down here. So seemingly, unless we get a collapse in the next little bit, it's looking like we'll have another bullish quarterly close for the euro, which could then mean that we go another leg higher. But right now, we're staying away from selling it until we get a bit more information. Shaun, anything on that one?
No, I think you covered it there. As you say, resistance has got to move to the top, otherwise we're not too interested in it. As I've said many times, we're never ever interested in selling the euro when it's particularly weak. It's a mug's game because everyone's always short it and they get squeezed out. So we need to see some more evidence of a topping process before we want to get involved.
Yeah. Okay, just looking at the pound. The pound's a bit different. Once again, when we look back to the recent lows, this quarterly support dropped, and that's what enabled the market to go up. By the same token, this monthly resistance got taken out, and we broke out, but has now moved back above price. And that was we put that out on the Slack site during the week. That was a level that it needed to get back above, and it hasn't. That's a closing resistance. And now this bearish close is telling. We've moved into the space on the volume profile. Pound's got lower to go. We're under last month's and last week's close, so we're definitely in a very bearish position right now. Any rallies to me are a sell. When I look below into some of the closing, sort of the midpoint analysis, we're now under last month's midpoint as well, so there's further evidence on a longer term basis that the pound's breaking down. And the supports are really quite distant. In the short term, you've got this sort of 123.60 zone, which is last year's close. That'll be a level that it pulls up for a little while, and then all the way down to 121 on the downside. So looking to add to short positions on the pound. Shaun?
Yes, one of the things that we're always interested in is what we call space. So whenever levels are broken or the trend changes or whatever, and we get a breakout, we're interested in the space to the next support or resistance. And this is a very good example of a market that's got plenty of space. So the nearest support is the best part of 400 points lower. So it's not just about taking signals and stuff like that. It's seeing where something has room to move as well. And so the pound has. So we will be getting short in a pretty major way.
Okay, just moving on to the Aussie dollar now. Aussie's just been rotating in a range for quite some time now. It did put in a pretty serious high on the annual chart there. It's got a major level around 0.7837 and did a lot of work up around there trying to break out and obviously failed. Interesting though, it's a critical level going forward, 0.7837. You get a monthly close over that and it seriously opens up 95 cents. But obviously we had a few pokes at that piece of towel up here, up the top here, and we failed pretty badly. We got a very rare signal there that marked a major high, and right now we've recovered up on a mean reversion basis. Really, the critical hurdle now is last quarter's close, down to 0.7618. We are also coming into the end of the quarter and the end of the semi-annual period, so that's why we've pushed back up here to test this blue semi-annual bullish level to see if it can close above it. But should that fail, then there's more evidence of weakness. You can see that the quarterly bullish is all the way up here. So really the Aussie is still in a weak position despite this little corrective move higher for me. I'd like to see it, in the short term, closing above this 0.7 or whatever that monthly pivot is there, 0.7561 to maintain it. But it is under monthly resistance right now, so it's got its work cut out for it. Shaun, any other thoughts on the Aussie?
No, I think you covered it there.
A quick look at the dollar index. That's just going to be the reverse of the euro. It's trying to find a low. Not sure that we've had enough sufficient support created yet. Just let me take a look.
No, it's the inverse of the euro, so it hasn't really formed any support points of note yet. It stopped falling, but that's about all you can say about it at the moment.
Yeah, and look, it's always interesting to reflect now that we're down at the lower bearish annual pivot now, and it was only the start of the year where we were sitting back up at the upper bullish pivot from the previous year. So if I just go back, and this is something that we see, you see a lot in any time frame where you get a failure at the upper bullish level, only by a small margin as well. So if we just come here, there it is there. So there's the upper annual bullish pivot, and we just missed it by a fraction. And usually when that happens, you go all the way back down. There's that sell signal again, Shaun.
Yeah.
You go all the way back down, and we test the lower zone. So, really, the dollar index is still in a bullish mode at the annual level. Now, the only reason that we would change our mind there if you had a yearly close under this 97.38 zone. We've still got a long way to go. So, if I look down below, you've got the major support here at 94.66. Now for the week ahead, okay. So the bearish weekly pivot's there at 96.72, and the bullish is at 97.65. So that's the closing levels that we'd be looking at. There's obviously a bit of space there to the upside if should we close above this level come the end of the week. But right now, once again, you can see this yellow line. It hasn't dropped down under price, acting as support. So fair warning that the move down isn't over.
Yeah, I think the main positive there is the first time we've closed above the weekly pivot for some time. So that is a positive. So, but what we really want to see is some support lines go to the bottom of the trend, and that would embolden us sufficiently.
Okay, so I might just have a quick look at Indexes start with S&P 500 futures. Had a bit of a wild move on Friday. With a move to both sides, it sort of cleaned out most day traders. I would have thought. It is approaching. We are approaching the end of the quarter and the end of the semi-annual period, and it's important that for equities to keep going, that we do get a bullish close above one of the monthly pivots, because it's been quite some time now that we've been able to take out the monthly bullish, particularly on the Dow. So if I look at the S&P, so there was the last bullish close. So we've had this month here, this month. So we're on the fourth month, and we're in a slingshot down mode where this upper monthly bullish pivot is above the quarterly, which is it's a warning sign that the market can turn down here. So the fact that we haven't been able to take out these bullish pivots for 3 months on a closing basis, and now it's overextended, it's fair warning. But once again, we still haven't seen weekly resistance move to the top either. So I'm not advocating getting short the S&P, but there's some warning signs right now about equities and being long them. So Shaun, you're probably well placed to talk to equities.
Yeah, there's a lot of rotation going on. So we have again, coming back to crowded trades, everyone's long tech, semiconductors, telecoms, and those short oil. And the evidence on Friday was the massive unwinding of that all at the same time. So this is where algorithms, dark pools can play havoc with your positions, really, and why crowded trades are so dangerous. You've got to be, if you're going to be in them, you've got to be prepared to just take money off on strength, and not wait for a reversal, because it can be so deep. So it's pretty important to me. Whenever we get, I've seen this many times in the past, where you start getting big dislocations between the different indexes. So the Nasdaq was way down and the Dow was up, and that's always a bit of a warning sign to me as well. But technically, it's the end of the month, end of the quarter, and semi-annual. So that's really important. We're only a couple of weeks away. I think it's 24.31, isn't it? I think is the level on the E-mini.
Yeah, that's right. Yep.
And that's really pretty critical. If we close above it, the other thing you got to remember, if we close above it, then it resets everything, so it will leave space on the upside again. So that's how critical these end of months and quarters and semi-annuals actually are. On one hand, it's going to say to us, right, it's the first proper sign of weakness in some time, or it's going to say, hey, there's a load of space opened up above and we can rally again. So very, very important. And the fact is, we're right at the price at the moment, so we're just going to have to wait and see.
Yeah, that's right. We've been making a big distribution around this quarterly round pivot there. And one other important point to note, and you often see this, is that to get a quarterly buy signal like that, it often means that you have to become overbought at the monthly level, and that's exactly the case there. So you could have a quarterly buy signal here, and then it would be entirely reasonable for the market to pull back and test this monthly support. But yeah, for me, it's 4 months without taking out these pink bullish pivots, and now a failure at the quarterly would be a warning that the E-mini needs to correct. And it's a pretty common theme across the Nasdaq, across all of them. Obviously, the Nasdaq's been the strongest. Maybe we'll just have a quick look at Dow now. But hang on, before I go, so the bullish levels this week for the forecast at the moment is 24.43 on the upside. On the downside, you've got 24.17. So weekly closes under those. So for the Dow, this is Dow DJIA.
took out that monthly. It took out that monthly resistance, didn't it? Just about.
Yeah, it must have. Yep. Let
Yep.
me just put it in there. So, sorry, the data's a bit slow today, folks. Yeah, so it's rushed up at that quarterly pivot, taking out the old high. My computer's still calculating things, so bear with us. But it's in a similar position now. You've had 1 month, 2 months, 3 months. We're on the 4th month, and we're at the quarterly pivot. So any failure here is going to open up a test lower. And the critical level in my mind is around here. It's around last year's close, and it's also the lower quarterly pivot around that 20,000 level. You should expect to see a fair bit of support, and you would expect that to hold going forward. And really, any break of that would be fair warning that all's not well with the Dow. So short term, look to get it over 21,271 at the end of June. Conversely, back under this semi-annual pivot is also going to be fair warning. Under 28.04 at the end of June is telling you there's some weakness coming. Might just have a quick look at the NASDAQ. I've either got this computer working way too hard or it's just really slow.
Well, the Nasdaq gave, I think it was a UFO and a slam dunk sell, although the close was a long way off in the end.
The way I look at that.
Yeah, pretty scary. Although it stopped just ahead of is that the semi-annual level?
Yeah, it's stopped right on the quarterly.
Quarterly, sorry.
Let me just put in the actuals. There it is there. So what can we say about that? So it's broken through last month's close. It's closed the week bearish. Was overextended. I think. Yeah, it's held this upper quarterly bullish pivot perfectly. Once again, though, we've not seen resistance move above price, although you would expect possibly that we are going to see that next week, Shaun.
Yeah, that's just one thing. We've got two ways of measuring supports and resistances in terms of swing points and fractals. It's peak energy and peak expansion. One uses volume, one uses range. And we've had this massive extension of range, which means that we are pretty much guaranteed that the daily levels, they're 5-bar patterns. So by the close of Tuesday, if we haven't made new highs, which seems unlikely at the moment, then the daily levels are going to move to the top. So we already know that. A lot of our analysis is predictive. It's not reactive. We already know what we're looking for ahead of time. So we know that the daily levels are going to move to the top. Now, ideally, we'd want to see weekly levels move to the top. But of course, that's going to take that would take another 2 weeks. So we always understand this process. This is very much how we see sectors top out when they're the most fashionable and the number in the top 5 sectors. We see these processes building and we can see when they're going to happen. And so it's pretty much guaranteed if we don't make new highs that the weeklies are going to move to the top because of that massive expansion of range. So again, pretty important couple of weeks because that's going to actually that's a good point because the weekly peak levels are going to coincide with the end of the month because we've got 2 weeks to go. Yeah. So that feels like a timing point to me, big time.
Yep. Agree with you. So critical levels for this week on the upside are 5778, and on the downside, weekly close 5685. And then you've got this major support coinciding with the weekly bearish down at what's that? 5550. That's the levels for the week, and looks like there's a bit of a shakeout underway. Might move on to corn. I'll let Shaun talk to that. Done a number of interesting articles on that and called the breakout nicely. Shaun, what's going on with corn?
Yep, it's my number one trade. So fully loaded on that in a variety of ways. As I said earlier, I've been trading corn for ever since I started trading. So few things in the setup. When you're trading corn or soybeans or wheat at this time of the year, ideally you just want to trade it technically, but the vagaries of the weather means that the market can get extremely volatile. For beginners, I really wouldn't advise starting to look at long-term weather forecasts and all those sorts of things. On the Slack, I will put brief comments about what I'm looking for in the weather and what I'm looking for it to change. The other thing that you've got is lots of different weather models these days, so it depends which one you want to believe. So there's a lot of things going on there. Technically, what happened was we'd had the narrowest range congestion count, as I put into the piece, had its highest reading since 1984 or something crazy. So we were coiling for a move, and there's a few things there that would make me think it would be a bullish breakout before the weather really started playing with us. The first thing, the funds had nearly a record short, so they're just looking at moving averages. I mean, the managed money is their way of doing technicals is painful, really. I mean, they're tracking it with 50, 100-day and 200-day averages, so they haven't really moved. They haven't moved out of the 1960s, really, in some of those ways about how they track a trend. So price was below the averages, so they were short, and they were short in a big way, well over 200,000 contracts. So what can happen is if they get proved wrong, they're obviously going to have to get out of their shorts. And then if we start breaking some technical levels, then they might actually get long. So it's not beyond the bounds of possibility that they could be a net buying of 300,000 to 400,000 contracts as they get out of their shorts and get long. So that was a potential bullish fuel. Technically, we broke out, and we had, from a fundamental point of view, the weather has got too dry. It was too wet at the beginning, so it led to delays in planting, which in the modern world is not a big thing. They can put vast amounts of crops in with mechanization very, very quickly. But what it does mean is that the corn is planted late, which means that it's going to mature in the hotter part of the summer potentially. So that's what's happened to a great deal of the corn that had to be replanted. Now what's happened is for the previous 2 weeks up to Friday week, it was the driest period in the western half of the Midwest and the upper Midwest for many years. And I put a chart out there of the last time it was that dry, which was in 2012 when corn went from $4 to just about $8, so it doubled in price. Corn is currently trading near that $4 mark again. So technically we broke up. We had a supply-demand report on Friday that just caused a little bit of a spike lower, but it's recovered. What I'm looking for in the weather forecast is the hot weather to just keep on moving out an extra day. So on the Tuesday last week, it was meant to be till Sunday. By Wednesday, it was going to end on Monday, and by Friday, it was going to end on Tuesday. So the hot weather's moving out. If it stays out there for another week or 10 days, it starts doing serious damage to the crop. It's already going to affect yields. It's going to make yields lower, which is why the market's going up to a certain extent. But we're entering the critical next 2 weeks. It's worth remembering that the eastern Midwest is probably in a lot better shape. It's not as hot, and there's a bit of rain around. So I'll be keeping everyone up to date with what the weather is doing and what the forecasts are doing, but it is going to be volatile. But if the weather does not improve, corn is going a lot higher. I don't have much doubt about that. The way to get involved there is there's an ETF called corn, and there's options on corn. So slightly out of the money option for November. So you go through the whole crop year, get plenty length of time there. Costs you about $100 per 100 shares, or $1 a share. So it's a relatively inexpensive way of getting involved in something that could be explosive. And your risk is limited, so you can ride out the volatility. So the wonders of modern ETFs and options on an ETF gives opportunities that wouldn't have been there to ordinary people just a few years ago, really. So a lot of focus on corn. As you can see there, we've got, what have you got there? You've got, we took out 384.5, which was a monthly peak level. And you've got the, is that the you've got the quarterly and the semi-annual there, is that right?
Yep, so the high was the semi-annual, sorry, the high was the quarterly bullish pivot,
yeah.
so we're right at it. And the close above both of those would be indicative of further strength. This week, the bullish weekly level is 39.27, and the bearish is at 38.25, assuming we open roughly where we closed. There's quite a few signs, though, that this market was brewing for a breakout. Particularly for me, I look at the end of Q1 right there, and we get this brown dash line. That's the previous quarter's close. You can see how the market held it and how we were also closing above this weekly bullish pivot there. So no signs of weakness through this rotation sideways. And then critically, this is often something else you see right prior to a breakout, is where the monthly close and the weekly close come together and act as like a springboard. And that's exactly what's happened here. So typically you'll see that at a rotational point, at a high or a low, the weekly and the monthly close will move together and then price can fire off it. And that's exactly what's happened here. In the short term, we've become a little bit overbought. So any pullbacks will be a buying opportunity. Why am I saying it's overbought? It's only in a short-term time frame. It's because the weekly is above the monthly. That's not to say it can't just blow through there, but it is indicative of a short-term overbought. So any pullbacks towards this 38.25 would be another buying opportunity, or even towards this monthly level, I would have thought. So might just go into beans.
Sorry, there's one other thing. Can you just call up a daily continuation and just put the volume and open interest on?
Yeah, yep.
Old-fashioned analysis. One of the first books I ever read was by Ken Charlene, called Volume and Open Interest. Classic. This is when there wasn't really any computers, so a very interesting book. It's quite difficult to get hold of, and it's, I think the last time I saw it, they're about $300 each. There's not many of them around. But the a few classic things there about what happens with volume and open interest at certain times, and sometimes classic analysis, certainly not moving averages, we don't include that, but things about volume and open interest, those relationships are fairly static or uniform. So I'm just going to show you something about what's happened to the volume and open interest in the last week, and it is worth just looking at it once a day. Okay, so the first thing there, so the blue line there is the volume and open interest. The black line is the volume. First thing on it was record volume on Wednesday, yeah, and what it is the farmers, or the people who advise the farmers. There's a lot of agricultural companies, hedgers. They don't really use technical analysis in any sort of modern way, shape, or modern way. They are looking at averages, or they're just looking at previous support and resistance. And so they would advise farmers to hedge. To be honest with you, they advised them completely wrong. If I was going to advise a farmer to hedge in this setup, I would have said buy some put options, so that you've got some protection on the downside, but your upside's unlimited, so you can get a lot more for your crop. They obviously weren't listening to, well, I don't work for them, so I don't know what I would say, but they were selling futures. So the massive volume was farmers selling and funds buying. Now, some of that would have been funds buying back things that they'd short, and also possibly some getting long. Now, what I was interested in there was to see whether if open interest went down. Yeah, because if it goes down, it means it's short covering. So it's not the same amount of fuel going into the market. Yeah, it's just people getting out. Yeah, and as you can see there, open interest actually went up quite considerably, and that for me is bullish. Yeah, it's encouraging. It means that a lot of farmers have already hedged up, so it gets rid of a lot of selling pressure. Because they've already hedged up, they can't sell anymore. At some point they will be fully hedged. So the fact that open interest went up for me was a positive sign.
So this is perhaps here, Shaun, is probably a good example of what you're talking about back in the middle of Feb, where we get to this breakout point and then the open interest collapses, and you're saying we're at a breakout point and the open interest is staying up.
Yes, that's right. And also, when we made that high and we were at that resistance point, if you look at what the open interest was, it was pretty much the limit of a participation. If you go back to June last year, you'll see that it was the same level. So we haven't got anywhere near the same level of participation. So the funds had a record short, but the amount of people involved is not anywhere near a record. So that again allows room for the market to go higher. So there's bullish fuel, as it were. You might want to do crude oil. Just we can give another example of if you just do CLE, and then there'll be some different things there that happen as well. So when we were getting close to a breakout earlier on in the year, we had 54. I can't remember, 54.50 or something. If you look at the open interest, look how much it's been going up. Yeah. So the level of participation just keeps on getting higher. But when we were at those highs, the fund long was pretty much at an all-time high. So how much more bullish fuel is there? And this is where sometimes it can give you a clue about whether something has room to move. What you do have to remember that the limits of participation can change, which is obviously what's happening in crude here. But what's happened here in recently is this move back down has washed out all those longs. Yeah. So if we do turn back up again, it'd be interesting to see if we made new highs, what A, the open interest was at that time, and then B, how funds are positioned. Are they near their historical limits of participation? Because if they're not, then it gives the market room to move. Of course, the difference in corn was the fact that the funds were short, so they're actually the wrong way, which gives it even more bullish fuel. So it's always something we're looking at the background. Old-fashioned analysis, open interest and volume, but still has its place. Just on soybeans fundamentally runs a different crop cycle, so the weather's not as critical on beans as what it is for corn. Beans are harvested a month later, but it still obviously doesn't help. One thing to remember, with my fundamental hat on, North and South Dakota now produce about 10% of the country's beans. A few years ago, it was only 2%. And they're getting the brunt of the drought and the bad weather, especially North Dakota. So the market could start to focus on the fact that the acreages, some of the acreages, is suffering. Got to remember, soybeans are a very, very hardy plant. It could be looking terrible. Good dose of rain, it will recover very quickly. So beans did break out as well. Still got a lot more work to do though, haven't they?
Yeah, the kind of no man's land at the moment. Looks like a big solid zone down there at 87. And the monthly are back up at 99.70. So we're just trying to find some support again at the moment. And you can see we're stalled at last quarter's close right here. And then there's that corresponds with its big volume levels. So there's quite a lot of resistance here. This bullish monthly pivot going forward. So really, we need to see beans back above 9.49 come the end of the month. So what does that leave us? I might just take a quick look at oil. Really, the big level for oil for me coming into the end of June, if it is in fact weak and going against the annual trend, which is clearly up from last year, then it does need to close under around 42.20 at the end of June. Should that happen, it could get pretty ugly on the downside. It looks like $32 to me. But as yet, there is no evidence of a change in trend at the monthly or higher. And so until then, just continue to remain bullish. We seem to be oscillating in a large range, largely due to the big sell-off that we had from the 2015 high. That's still filtering through the market in terms of the ranges that we're seeing on a monthly basis. So we did close bearish last week. However, for numerous months now, we've been attacking this monthly bearish, but we have not been able to close under it. So until that happens, then it's entirely possible or feasible that oil can turn up. Here's a critical level for me around this 42 42, early 42 zone, and even under this recent low on a monthly basis would start to raise a fair bit of suspicion to the downside. This week, we'd like to see it back above 46.60 on a closing basis, and to move down, be back under 44.5 by next Friday. Looking at sort of the mean reversion process, does need to get a bit of a grip. We've got last year's midpoint all the way down here at $40, underpinning support. But you'd have to think if we're down there, then oil's going to be in a bit of trouble. So, Shaun, any thoughts?
No, I agree with you there. One thing I would say is, as part of this rotation out of being short oil stocks, do you want to call up Conoco, COP? So a major oil company, there was a buy signal on Friday. It was a trade safely buy signal as well that went out on Slack, so you can see it there. Big expansion of range. And it was at a support point. You've got that pink line there.
It's taken out the monthly and weekly close as well on a closing basis, which is always bullish.
Yes. So there was a lot of reversals on certain oil stocks. Conoco is one that we would be looking to get long. It's an easy out, close below that final support point, and there isn't anything below. So very easy to know where you're wrong. We're always interested, ideally, when we're trading, whether it's long or short, at the final support or resistance. There is no doubt about where you're wrong, and that always makes it a lot easier. So that's one that we're interested in. If you do XOP, I think it is, which is an ETF. And that just about closed above as well, didn't it? That was very, very close. It's got another daily level, yeah. So support hasn't moved to the bottom of the trend, but it's showing some signs of reversal. So a few things there. Shall I take my screen over and go through this Market Smith and the sectors and everything?
Yeah, I'll just...
anything else you want to finish up on?
No, I'll just switch over to you. Just wondering how I'd do that.
I can just switch my screen share on, I think.
Oh, okay. All right.
You switch yours off and I'll switch mine on. I should take a few seconds, probably.
Okay, I can see it now. Yep, you're good.
Oh, okay.
All right, Shaun, well, you can bring it home then.
Okay, so actually gold's the chart that we've got at the moment, so we'll just quickly do gold. We failed to get to a weekly level, and then I haven't got my chart set up with all the weekly levels, but we closed below the weekly pivot, didn't we? So
Yep.
we're negative on gold. We think it can start rotating back down again. So that was one that we just forgot to do. Just going to show some examples of crowded trades. So stocks, semiconductors, been on a ramp for many months now. We broke out above the final resistance all the way back in November. I'll just highlight this here. And we've had various times where we've come back, and I have a slightly different color screen to Jeremy. My weekly lines are black, and my dailies are red and pink. It's interesting that we had this massive reversal on Friday on a lot of tech. We've got slam dunk sell signals, UFOs, time continuations. Did not take out the nearest support though. So we had a bit of a dip here. Remember I talked about it a few weeks ago. Again, we had a slam dunk, time continuation. There's also a bear cage as well. Everyone head for the exit at once, but it never took out the first support point, and then we go back up again. So this is where this topping process has got to come in, and it hasn't done it yet. And in fact, I went through all the sectors, and the only one that broke support was XTL, which is telecoms. Just show you that. And this is a perfect, what I would call a perfect setup. This is the blue line, which is for me as a monthly, so it's been there for a long, long time. And then moves to the top of the trend. Yeah. Then we came down and tested the weekly support, that black line. We had what's called a bullwhip. Yeah, so we rotate back up again. Where can it go to? Well, it can go to the monthly line. We have a bear cage, which is the opposite of bullwhip. We have a time continuation and now a UFO at monthly resistance. So that is something where the setup is different on telecoms than it is on semiconductors. Completely different picture. And if I'm now going to go into MarketSmith and show you how I do everything to do with how I analyze sectors. Now, I spent 2.5 years running a private fund here in the UK. My premise was to build fundamental based systems on American stocks and technical systems as well. We used a thing called Panerai, which is the professional version of this, which is MarketSmith. So Panerai costs well over $1,000 a month, $1,500 a month. Vast amount of information and things you can test and study. MarketSmith is a more retail version of it, and can do some basic stuff around it. Also use Zach's Market Wizards, or I think it's called Market Wizards, I think it's called. Massive databases, lots of things you can do. Not easy to program, but you have to do a bit of work there. I thought the project was a waste of time, and about 1.5 years in, I was pretty convinced it was a waste of time. I can tell you now, without any shadow of a doubt, you can get exactly the same fundamental setup, sales growth, blah, 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 whatever other people talk about. And the price can go up, it can go down, or it can do nothing. There is no rhyme or reason. All that matters is whether it becomes fashionable or unfashionable. And so what I tried to do was to work out what was going to become fashionable. I said, okay, I identified that. How can I then break this down? Because there's 8,000 stocks out there, and there's you've got to, less is more. You've got to build technical code that's very rare, so you don't get too much of it. So power play, slam dunks, bear cages are all stock specific creations, and some of the other ones that Jeremy done are very much lend themselves to stock and futures as well, because they don't happen very often, and that's what you need. How many stocks are above their 50, 100 and 200 day moving average? Well, hundreds. How do you know which one to choose? So less is more, and the book we've written, it'll be out shortly, talks about that as well, shows some examples. However, could I work out what's going to become fashionable? And the answer was sometimes I could and sometimes I couldn't, and it was very difficult to program it or to really get any sort of confidence about how I could move forward with it. And then my eureka moment was then to say, hold on, why do I want to try and work out what is the next flavor of the month? Why don't I let the market tell me what the flavor of the month is? Let it stay there as the flavor of the month, because inevitably it's going to lose its, people are going to get disinterested again. The reality is it's just like bell-bottom trousers, hot pants or whatever. At one point they were wildly fashionable, and then they're not fashionable again. And this is what's happened. And over the 2.5 years I was doing the project, I'd remember in MarketSmith, this is the industry groups, I'd think to myself, oh, well, that was the number one sector or number two or number three. And then I'd go back and look at the chart, and the share price has dropped 30%, or sometimes 50%. I said, well, what's changed? Nothing's really changed. It's just gone out of fashion. It's become a crowded trade, and then everybody gets out. And that was my eureka moment. A couple of years ago, I said, okay, I don't have to try and work out what's going to be fashionable. I just have to identify what is and then work out the process of how that ends. And so what we had earlier on in the year was banks. So regional banks were number one after Trump. They're probably languishing down. I think they're way down at the moment. It's a little bit difficult for people to see. Here we go. So Banks Southeast is now number 83. It wasn't one of the strongest. 6 months ago, it was number 11. Now, if I go all the way to the bottom of the list, Well, here's a good example. Mining and metal ores, number 6, or number 5 3 months ago. Now it's number 166. And then right at the bottom, energy and coal, which is number 195. 6 months ago, it was number 1. And I can tell you now, 6 months before that, it was 197. So we have this fairly crazy situation where things just rotate backwards and forwards and in and out. And so what we're interested in is 2 separate things. First thing is what's at the bottom, and the process of how something bottoms out is actually different to how it tops out. It is a different way of doing it. So at the bottom, oil and gas in its variety of different ways are all pretty much in the bottom 10. Also, wholesale auto parts, pretty poor, although auto cars, or selling them, is actually in the top 10, I think, so it's a bit weird there. So we're looking at what's at the bottom. Retail apparel shoes, this is one that we're very interested in. That was number 1 about 2.5 years ago. So 184 was 36 just 6 months ago. So starting to look at that one. And then at the top, it'll take a few seconds for that to come up. We have telecom services, semiconductors, and these have been the top 10 for quite a while now. So we have auto manufacturers, computer software, medical and computer software gaming. Now, the former was at 160 6 months ago. Now it's number 4. Software gaming was 84, is now number 3. So these are now start hitting our watch list at the top to tell us whether we're interested in them. So this updates once a week. There's a lot of other things in MarketSmith. One of the favourite ones is the Growth 250. I call it the Okie Dokie 250. Things coming in and out of there at random. And what you'll tend to find is if I go into the Growth 250, what it will do is it will be full of things that are already in the top sectors. So if we go to the industry name, the top 12 stocks are all semiconductors. Yeah. So I would be looking at those top 12 stocks and looking for the topping process to occur. So if I do, which is number 1 of AMAT and LRCX, so let's quickly have a look at them. I'll show you what I'm doing. LRCX. I know this one reasonably well. Yep, breaking up. Massive sell signal on Friday, just about everything, but it did not close below the nearest support. Yeah. So what I need to see is this black line, the weekly line, move to the top. Yeah. If I do AMAT, which is the strongest one, okay, up, has closed below its first daily support, but nothing on the weekly has moved to the top. So what I'm looking for is this sort of thing. I'm going to show you Motorola. So this is an example where up, the monthly moves to the top, and now we just keep on failing there. Yeah. So we need this topping process. If I was to do HBAN, so this is one of the banks from a few months ago. Yeah. So up. This point we have what's called a slam dunk, which is the day that I wrote the report, and we've rotated all the way back down. Where was the target? The target was the weekly level. That's effectively where we've stabilized, but the monthly has gone to the top. So we can get a rally in financials, come all the way back up to here. It wouldn't be the number 1 sector at that point. It'd be very unlikely that it would be. And that's when we're interested in selling it again. But for the moment, financials are actually slightly bullish. So we have to have this topping process. This is Goldman Sachs. So we had the sell on the day of the 2nd of March, had a slam dunk. One of the other things that we're looking for is what's called good news, bad action. So the results come out, they're good, and the share price goes down. That's another thing that happens with a crowded trade or when a sector's in the top 5. Yeah? Everyone's already long, there's nobody left. And so when the good news happens, the price doesn't actually go up. If I was to do CLAC, which is a semiconductor, I might think what it did. There we go. Right. So we have this period here. We've up. This was the day of their results, and they were great, and the market went down. Yeah, so that's another chink in the armor. Yeah, the weekly then goes to the top. Was on our watch list, and we've only had we have one minor sell here, but it wasn't really, there wasn't any expansion of range. And then on Friday, we've had a slam dunk, UFO, time continuation. Ideally, we wanted to close below 101.80. It didn't quite do it, but look at the space. Yeah. So this is one that's showing signs of the topping out process and becoming unfashionable in what is a crowded trade. Ideally, what I want to see is the market maybe rally, come up to this weekly, and then we get another sell signal. Or by the end of next week or at the end of the month, we've closed below those levels, and it can open up this space all the way back down to 77. I'm going to show you an old one, Campbell Soup. Campbell Soup, believe it or not, was number one, sector of number one, a couple of years ago. Don't slam the door yet. Don't slam the door. Sorry, grandchildren's just walking out. Here was a breakout, January last year. Market rallied massively. We have the topping process. Now the question is, that's very easy with something like Campbell Soup, is are we all buying 30% more soup? Well, obviously not. So it's quite easy to get your head around the fact that it doesn't really make any sense. The weekly went to the top. Yeah, so that's the next part of the topping process. Time continuation sell, slam dunk sell, and that was the beginning of the fall. Yeah, so we want that black line to move to the top to allow for the timing point. And then basically we came all the way back to where the rally started. Yeah, so around $50, and that's where we came pretty much back down to. Now we've rotated back up again, and it's not really much of interest at the moment. Now on the other side, the buying process is actually different. On the topping process, I need good news, bad action. I need weeklies to move to the top, some overextension. Yeah, and that process is normally, I would say, 2 to 4 months. You know, so something has to get to the top, stays at the top, and then it gradually loses its oomph. For stocks at the bottom, it's actually different in that something can stay unloved for a lot longer. Yeah, so things can stay at the bottom for a great deal of time, and we know they're there, and we just have to be patient. And this is Office Depot. So this was sector 196, lowest of the low. Amazon does all the furniture. Who goes to a furniture store to get office furniture? Stock has been down, goes sideways for at least 6 months, and we have this day here. This is a power play buy. It's also one of our divergence patterns. Just going to spread this up a little bit. And on that day, their results came in, and their results were terrible. So you had the opposite scenario. So we had bad news, good action, not good news, bad action. Yeah. So the results terrible. So what happens? Breaks up. Yeah. We have a power play buy. That's what we're really interested in. So that's going to get us involved. When we're looking for where it can go to, we say, well, we have the monthly resistance level, which was at 519 from about 330. We had another power play buy about a week later, not on any news. Then we break out. Now we've got space. We reach our target, and then it's drifted back. And since then, not really done very much. So something becomes suddenly becomes fashionable. I'm going to do Coach, C-O-H. So this is in the apparel space. I think they make handbags. The bottoming process was about 5 or 6 months. The monthly moves to the bottom, which is beautiful. We get a pops buy, and then away we go. It's been a bit of a difficult ride. We then had a power play buy on their results, but it had to get over the monthly level. It's done that, and away it goes. Yeah. So from 34 up to 46. Now that is a major support point. Are they making more money? No. It does have nothing to do with fundamentals. I'm going to show you US Steel. This is from a couple of years before. US Steel, Steel was 197. It's gone from $70 down to $6. We have various processes where it's doing absolutely nothing, and that was the first sign of a major breakout here through the weekly, because we've got space to the next weekly up at 21. So this is from $8 to 21. Had a fairly wild ride. I remember people getting interested in it, commentary-wise, when it was at $20. Well, it had already gone up 100%. The point I'm trying to make here, they're losing more money, yeah, and the share price went up by, over a long period of time, up by nearly 400%. So it's got nothing to do with fundamentals. And anyone tells you anything different, it's nonsense. They don't know what they're talking about. Sometimes it works, sometimes it doesn't. The other one, taking something a little bit more recent, pause. This is an apparel. No, this is discount stores. Not loved at all. It's been down, 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 down. Amazon taking them out. Walmart takes them out. I don't know. And this was the day of their results. So let's just scroll that up again. Unloved. Their results came out. They actually beat on revenues, and it gaps lower. Yeah. So when something's unloved, sometimes it doesn't matter if they do better. It still gets punished. Yeah. Sentiment is still negative. However, for our members on Thursday and Friday, or into Friday, we've had a bullwhip signal and a power play and a term continuation, but it had to get over this monthly level. So that final support, that final support became resistance, and now it's going to turn around the other way, which it has done on a end of the week basis. This is the weekly relativity levels, and not surprisingly, we've closed way above it. So that's an example of an unloved stock. Now we want to get involved, and that's probably enough. Does that all make sense? Sort of.
Yeah. Yep.
So top 10 sectors, bottom 10 sectors. The process for what tops out and what bottoms out isn't exactly the same, but we're looking. That's what we're really interested in. Buy unloved, and we want to sell loved. Right. So let me just get my screen back. Right,
all right,
so
well,
I'll give it back. We finished up there, yeah? I think that's probably
I
it.
think we'll finish up there. That's been a good run. Everyone this week, and we'll see you next week for a quick wrap up.
Okay. All right. See you all next week, yeah?
Thanks, Shaun.
All right. Cheers, yeah. Bye.
Bye.